Good afternoon to OEG's latest webinar. Thanks for joining us today and welcome back if you've been with us before. I'm Becca Rowland and I'm going to be hosting the webinar today. I work for Midas Aviation and we work closely with OEG. Our topic today is realising potential. We're finally seeing some countries and some regions actually offer more air services than they were back in 2019, and having focused for much of the past couple of years on how do we get back to 2019 levels, the next question is going to be where do we go from here? So we're going to be having a little bit of a look at that today. Is there some sort of common thread about the countries, the regions, where the markets where we're seeing recovery take place? It's a big topic, and I'm sure, as usual, we'll ramble and wander around the topic a bit as we discuss this. We will start, as usual, with a bit of a global roundup of what's happening around the regions, and then we'll move on to look at where we're seeing recovery a bit stronger, some of those, and look at what are those key aviation markets perhaps of the future, or are they just red herrings really in looking at recovery? And we're going to have a particular focus on markets in Africa, and we've got a guest with us to help us talk through that today. So let me start by welcoming John Grant, who's our regular chief analyst from OEG. John, thanks for joining us again. You're back from holidays. You're refreshed and buzzing to go.
Rushed back just to be with you today, Becca. Couldn't miss the opportunity. Yeah, it's interesting to get out and travel. There, all this hysteria about queues, security, didn't experience any of it. Either extremely lucky, or the press are making big stories out of little events that are taking place.
And we've talked about lots of things over the last couple of years, perhaps a bit less about just the economics behind travel. And but you were saying the States was really expensive as a Brit travelling over there. Are we going to now start seeing some of those things like just exchange rates play a role in how we travel, who wants to go where?
I think so. I mean, it was expensive because I took my family, so you know they were in the shops straight away. But yeah, it's noticeable that the dollar is really strong at the moment. And I think when I've come back, I've almost been taken aback by the sudden change in market confidence for the airline industry in the second half of this year. Price of fuel, obviously, 148% up on last year. Strength of the dollar, lack of resources, extremely high airfares. You know, lots of pent-up demand traveling right now. But a sense that in the next couple of months that pent-up demand is just going to have to go back to work, and we'll go back to the seasonal norms in terms of demand. And then come September, where is the corporate market? We've not seen that return yet. We've still got to see some markets reopening. So yeah, a bit more than a bit hesitant about the second half of the year, and looking at some airline stocks over the last 3 or 4 weeks, and of course with the Ukraine situation, most major airline stocks are about 20 to 25% down on 3 weeks. So the market sentiment and the investment sentiment is not good. Not a great day for a new airline starting long haul low cost, I would wager.
I'm sure we'll come on to that later. You'll have plenty to say on that. Thanks, John. And we've also got with us Ogaga Ujo. Thanks for joining us. Now, you're in a sense representing the whole of Africa today, but you're actually in the States, aren't you?
Yes. Greetings from Washington, DC. It's an absolute pleasure to be on this platform again and to engage on the very interesting topic called recovery.
Excellent. And you're still working with ZA Logics, though? Still doing?
Yes, indeed.
So you still have plenty of expertise, lots of active engagement with the industry at the moment. Excellent.
Indeed, it's a period of extreme flux and restructuring. You know, of course, this week was the huge announcement of the provisional liquidation for Kwame Limited, an entity with, you know, over 70 years of profitability, and that has quickly come to a crashing end. So really a time for reflection within the industry, and I think time for real action and paving the way forward in a very pragmatic way.
Yeah, I know you're somebody who sort of probably always is looking for things that will trigger change in Africa in the direction you think is positive, and it'll be interesting to hear whether you think this might be one of those triggers to actually see the sort of change you think would be good for the continent. Okay, let's make a start. We always start by having a look at the sort of global picture where we are. This has been updated to show capacity up to this week. We can see a little bit of a blip here, which was all that capacity we've been seeing coming in and out in China, which seems to be put back in. And at the moment, we're looking at a fairly static capacity through the Northern Hemisphere summer months, aren't we, John?
We are. We're at 96.6, as you can see. That's an extra 1 million on last week, much of which is from China, and a few little growth areas in other parts of the world. But it does go above the 100 million mark in the next couple of weeks. Now, I think we need to be cautious about that. We know airlines are having to make last-minute adjustments to their schedules and their capacity. You know, there's another small outbreak of COVID in a part of Shanghai, so you know what will happen there. And of course, in Europe, we've got airlines struggling to resource their networks at the moment. EasyJet taking 40 more flights a day out from now. Probably other low-cost carriers may follow suit. So yeah, we'll hover around that 100 million mark. Whether we will break it and get on the other side of it, I don't know. But I think there are two important messages here, Becca. Firstly, you know, we've nearly doubled capacity compared to this point last year. And in some markets, it's 3 times larger than it was this time last year. And of course, we're getting closer to the 2019 levels. And along with that, we're actually seeing extremely high load factors on international services, which is really encouraging and shows that the market is bouncing back. And I think that's the dilemma for the airline industry. You know, 3-4 weeks ago, or when the Q1 results were announced by airlines, they were all very positive and bullish about Q2, Q3, and thought that the worst was behind them. Whereas, in fact, COVID was behind them, and we now have the normal challenges of the airline industry in terms of oil prices, demand, economic activity or lack of it, trade wars, and all of those sort of things. So it's good to get back to normal business for an airline CEO, I guess.
It certainly does feel like that, and I'm sure that's going to come out as we go through the next hour. That you know, for many of us, perhaps a bit less so in Africa, but for many of us, it does feel like we're returning to that sort of cyclical nature of the industry. That, you know, for people like you and I who've been around in the industry for 30 years or more, have seen many times before, where we see oversupply and we see costs rising, and and it just goes backwards and forwards, doesn't it? So we're facing, certainly as we come into the autumn months, we're looking at quite a few of those issues, I think, aren't we?
Yeah.
Let's have a look at the regions themselves. Obviously, the red line here is that sort of China just being all over the place the last few months as they pulled capacity out and then they put it back in. We saw 12.5 million seats come out in April, and then since then we've seen 15.7 go back in. So just huge swings. But we're expecting the next couple of months, perhaps not as high as this red dotted line shows, but we're expecting it to continue its upward trend, aren't we? All things being well and COVID being under control in Shanghai and Beijing.
Yeah, there's lots of positive messages here if you look at each regional market. I mean, if you look at Southwest Pacific, where it was 9 months ago, and to where it's got now, that's had a couple of hiccups along the journey, but it's recovered well. Western Europe, again, another market that's performed strongly. But I think within each of the regions, there are a couple of countries, and we'll touch on a few of those as we work our way in the next hour, that are ahead of 2019 capacity levels. But most are going to probably end up between 85 and 90% of their 2019 year capacity for 2022. So that will be an interesting test. And I think in some parts of the world, we're still coming out and beginning to break through some of the previous restrictions. We were talking this morning in Southeast Asia that there's still a long way to go in terms of resourcing. And some markets are only at major markets are only at 65% of their normal capacity levels. And and even those markets are having resource issues now. They're struggling to get airport security people, get staff with security clearance in many roles. But yeah, it's a much better picture, but I would be surprised if any region is above you know, 0 and is into positive territory by the year end.
Yeah, it's taken a long time to get even here, isn't it? Agago, the purple line here is Africa. Do you any comment? I mean, they look like they're doing quite well when it's compared to 2019, but is that it was you know, they were underperforming perhaps before COVID came along?
Exactly. I think you know, the case of Africa, I've been quite upfront about this on various platforms, that COVID really didn't cause our issues. There were so many pre-COVID factors that comprised, you know, the market structure. You know, you mentioned overcapacity, the misalignment of supply and demand, entities that were not right-sized. I think what COVID did was it compounded these issues, and it really brought them to the surface, where particularly shareholders, who largely are government owners, really had a challenge of prioritizing fiscal support. So also with that said, though, I think the African context is definitely nuanced, and I know we'll get to that a bit later, because you'll start to see the trends more around regional influences between West Africa, Central Africa, Southern Africa, North Africa, East Africa, who all have pretty different dynamics. I do think that overall, you know, last year we closed, Africa closed on a loss of $8 billion in revenue, which comprised about 49% of revenue from 2019. And the expectation for this year is to close on a loss of around $4 billion, which represents around 29%. So yes, we are slowly creeping back to 2019 levels from just a general market sizing perspective. But, you know, I just must mention that I don't think we're out of the water. We cannot go back to what we've been doing. It really is an inflection point of what we need to do going forward to move beyond recovery. I'm noting that other parts of the world are more in a normal cycle perspective. I don't think that's the case for African aviation. We are certainly very much in the throes of it. However, you know, we are expected to recover from 2023, 2024, just from an analyst consensus perspective in terms of market demand back to 2019 levels.
Okay, very, very interesting. Okay, what I've done here is just put a slide together with sort of some of the things we've seen happening around the world since the last webinar. So it's a mix of things that are, you know, the different dynamics going on. We've already mentioned the Comair being grounded just in the last week or two. In the middle here, we've got some of these generic things, the fuel price still remaining very high. We're seeing rising inflation and energy costs going up, which is inevitably going to put pressure on disposable incomes. COVID deaths, I have a look fairly regularly at what's happening still with COVID, and the lowest level since really just as the pandemic started. So that does feel like it's a sort of a tick. It's a you know, something that we've resolved to some extent. And we've had lots of openings. The US dropped requirements for testing in June. Japan's partially opened. China, some of the lockdowns internally at least have eased. It hasn't helped international travel. But you mentioned that in Europe, John, that we've had lots of, you know, tons and tons of media coverage about staffing issues. But these aren't just confined to Europe, are they? We're seeing staffing issues and pilot shortages and in all sorts of markets.
We are. I mean, in Singapore, Changi is a case in point where the airport is now non-slotting requested services from carriers because they just don't have enough staff at the airport to handle those particular flights, and not necessarily the handling agent, but actually the authorities. So that's a frustration. Similar pressures in Kuala Lumpur at the moment, and that's, you know, that's difficult when you've got two terminals and they're on either side of the airport and they've got different operating systems. You might want to consolidate all your flights in one terminal, but that's not proven possible. But yeah, there's a whole host of issues, Becca. I mean, in Europe, I think the estimate is there's 100,000 aviation vacancies in the United Kingdom in the whole ecosystem of travel that need to be filled. You know, and there are labour shortages in all markets, and these are skilled employees in many cases. You know, you don't just get a job as a tug operator and push back an A380. It's a bit more complex than that. 140 days to be processed for a security pass in the United Kingdom at the moment, 139 of which are waiting for the civil servants to get back to their desk and process the paperwork. You know, it's extremely frustrating for the airline industry, who see all of this pent-up demand, want to operate, want to generate the revenues, and to some degree are being hampered by factors that, quite frankly, are outside of their control, but for which no one really wants to take responsibility.
And that's a message you've had all the way through, isn't it? This sort of dance between airlines and government and blaming each other. And we've certainly heard a bit of airlines blaming government recently for some of the issues. But it's interesting, your example from Singapore, where actually it's the authorities who've made the decision to manage capacity rather than let the airlines schedule as much as they want and then find it can't happen. So we're still seeing quite different sort of regulatory and government approaches to how to handle this, aren't we?
Very much so, and that sort of controlled approach in Singapore may, you know, actually, it sounds draconian, but it might actually be the most effective way to handle this issue. I mean, in Europe, one of the biggest frustrations I have is that nearly every Ministry of Transport has no employees or decision makers who have worked in the airline industry. So they do not understand the nuances, they do not understand the frustrations and what the airlines are trying to do and how they need to operate and plan. You know, and it just beggars belief that these people are influencing not just the airline, but also influencing the travel patterns of hundreds of thousands of people who want to go away on holiday after 2 years of lockdown. But it is what it is.
Before we come to Agaga and his perspective on this, do ask if you've got questions. If any of this discussion is means a question pops up in your head, do just put it on the chat, and we'll try and take questions as we go through and try and weave the answers into as much of the discussion as we can, as we always try to. Agaga, are we seeing the same sort of staffing issues in South Africa, or in Nigeria, in Ethiopia? Is that an issue there too?
I think in the short and immediate term, staffing is not a concern, but I do believe that it will be, simply because we aren't where we need to be from a recovery perspective. So you found that there were significant retrenchments quite early on with regards to aviation, not just airlines, but across the board. I think Ethiopian Airlines, they furloughed quite a bit of staff, but they've all brought them back. South African Airways significantly downscaled. Several retrenchment processes across the continent. And I think in the immediate term, it won't necessarily be felt. However, going forward, especially on specialized skills such as maintenance, etc., you are going to see a loss beyond normal attrition. Right now, as we speak, there's a Nigerian Aviation Conference, and that is held by the Federal Airports Authority. And one comment was made by the head there to state that Nigeria invested $2.5 billion in sending, aircraft from the country to other parts of Africa, simply because the capacity doesn't exist. And now, if you compound that with the COVID issue, you're going to have a challenge. So in the immediate term, the staffing issues for aviation in particular are not felt, but it certainly is going to be a concern going forward as we build up capacity for the region.
Okay.
Yeah, Becca, I think on the staffing issue, it's not only the recovery of the people that we've lost in the last 2 years who, were extremely valuable and are sorely missed, but many airlines have firm aircraft orders for new delivery in the next 2 or 3 years. And many of those airlines have already retired their aging fleets. They've got rid of the aircraft, the gas guzzlers, the environmentally unfriendly aircraft, and are operating lean fleets. So they're not really looking to exit out the back some of those aircraft, and that means that we're going to need to find more pilots, we're going to need to find more cabin staff, and we're going to train them up very, very quickly. And that talent pool just doesn't exist at the moment. It's being a pilot is about building up your hours and experience, and we've got this gap of knowledge. It's the probability is, Becca, you're going to have to put a cabin staff uniform on and start working for Flybe and someone's going to have to trust me to fly an aeroplane. I mean, you know, it's a very, very serious situation.
Okay.
I think on just one point, picking up from John, again from a longer term perspective, the OEMs and lessors, of course, are very bullish on Africa, and the long term expectation is that the region will need an additional 1,000 aircraft, you know, across you know, regional and large narrow bodies. There's definitely a trend towards right sizing, but interestingly, the consensus around 70% of that will be replacement, while 30% will be growth, and all of that needs to be resourced, you know, and we need to kind of avoid, not just avoid the labor issues, but also get the capacity where it needs to be to fulfill that growth in the long term.
So a lot of aircraft. So in Europe, certainly we've had a lot of media coverage recently about cancellations. This is some cancellation data that we've extracted from OAG Systems. I took it out about a week ago, so it just goes up to about the 5th, 6th of June, when we had a long holiday weekend in the UK. We were seeing, this is done by country, so we've got the UK, Netherlands, France and Spain. We were seeing cancellation rates peak at about 4%, 5% on some days, 11% on one day in the Netherlands. But the rest of May wasn't so bad, was it, John? Is the cancellations, the stories that we're seeing in the media, it's a little bit of a red herring, isn't it? That actually it's more about congestion and chaos in airports and not necessarily cancellations.
Yeah, it is. It's you know, it's a great story and it's a great picture, isn't it? To take a snapshot of a queue of people with their luggage waiting to check in or get through security, and it's a self-fulfilling sort of story, isn't it? Because as soon as people see that there's queues and you've got to wait 2 hours to check in and go through security, if you haven't traveled for 2 years, you think I'd better get there extra early, and you join a queue, and quite frankly, you shouldn't be there. The airline and the airport aren't open for check-in for that flight. They don't have resources available for it, and you know, today they're very lucky it's sunny at Gatwick, but you could be standing in the rain if you're not careful. The industry likes to have naturally the lowest possible rates of cancellation that it can. Less than 1% would be a normal sort of target and objective that an airline would have. So to be running at 4 times that level in the United Kingdom is not good, and it's slightly higher in some markets. And you can see in the data, you know, there was a particularly bad day on the 4th of June in the Netherlands when you know, things quite frankly melted down. But once again, you know, we need to think about and look deeper at the data. Where are these cancellations occurring? Well, they're typically occurring on destinations and on services where there are multiple frequencies a day. So even though they are short notice and they are inconvenient, you know, there are normally alternate services available that will be running that day or will be running either to and from an airport close to what you were originally booked. And if you're operating a long haul service, you know, most long haul services, particularly those that are operated on just a once daily basis, appear to continue to be operated. You know, they've been resourced and there haven't been any great issues around those. So it's about understanding where this is occurring and how airlines are trying to mitigate that risk by placing those cancellations in markets and on services where there is multiple choices and options available. And you know, if EasyJet are running 6 flights a day from Gatwick to Palma, for instance, and you're on the 5th flight and it happens to be cancelled, yes, it's inconvenient, it's not good news, but there are other flights around there, and move quickly and get a flight and then seek your compensation.
Yeah, I think that's interesting. We then managed to, having looked at this cancellation data, we managed to get some data going a little bit further back. So what we're showing here is for 3 regions, Western Europe, North America and Southeast Asia, the cancellations, the absolute number of cancellations. So it's not the proportion of flights cancelled, and we're just showing it for 3 years because in 2020 the numbers went through the roof in a short period of time in March and April, and they just make the scales completely unworkable. We wouldn't see anything else. So we've taken out 2020. Slightly different pictures here. I mean, obviously it's there were fewer flights operating than there were back in 2019, and so the absolute numbers of cancellations maybe are higher as a proportion of the total number of flights. but the sort of levels of cancellations across these three regions don't seem, and the pattern of them don't seem completely out of sync with what we saw in the past, do they?
No, and you know, we can have a bad weather incident, and you know, is there a correlation with global warming and more of these erratic weather conditions that we see in patterns, and that can completely lead to an airport being closed or a city being closed for an afternoon. And if that happens in New York or it happens in Los Angeles or wherever it happens to be, you know, that can result in high cancellation rates. So I think we've just got to accept that this is a blip through the recovery process, and that we will come out the other side of it. It is immensely frustrating. As I said earlier, the airlines don't want to be cancelling flights at the moment. Should be the time when they're enjoying high load factors and maximising revenue. I certainly don't buy the story that airlines are cancelling for commercial reasons, you know, and flights are poorly loaded and they're just consolidating flights. I think that's just another piece of journalism that's missing the story. But the industry, you know, the industry has some work to do to recover consumer confidence. Agaga, any views on how cancellations are running in the African market at the moment?
Yeah, so I think from the Africa perspective, it's pretty much a market feature. If you look at, firstly, the two metrics, if you look at average loads, which are actually amongst the lowest in the world due to the yield effect, there is a misalignment historically pre-COVID between deployed capacity and demand. And if you double click further, and actually Kwame used to do this, you have the deployed capacity and operate capacity is quite different as well. And that's really been a feature of the market. I think it's a host of factors. There's an element of market share chasing, at least from a perception perspective. There's also an element of optimizing and closing refleeting. Typically, many markets across the African aviation sphere are typically last minute. So you naturally find changes to capacity right up to 3 days, 1 day of departure. But I think the close-in refleeting process that a lot of airline managers employ across the continent is cognizant of this natural feature within the African aviation market.
Yeah, interesting. So let's have a look at the airlines. Since the last webinar, many of the big airlines have released their Q1 results. So we've listed just the top line numbers for a number of them here. Mostly, perhaps not surprising, a loss in Q1, but many of them saying that Q2 is going to be profitable. It doesn't necessarily mean that the whole year will be profitable. I think, as John says, the back end of the year is going to be a bit tougher, but a lot of them looking forward to a positive summer. I think the Delta one's really interesting. We've talked in the past quite a bit about Delta sort of repurposing its business, its premium cabin, and they're reporting March domestic corporate sales at 70% of 29 levels, but the premium domestic cabin revenue achieving the 2019 levels. So that seems to bear out what they've been telling us, that that premium cabin is doing very well with high yielding leisure travel.
Yeah, and you know, it's been a feature for Delta and the other US carriers that they've been quite creative in stimulating that sort of business cabin and filling it with leisure travelers. Pricing was slightly lower than in corporate, in the corporate world, where you wait until the last week to sell the seat. But the airline got the benefit of cash flow. You know, it had cash in its hands maybe 6 or 7 months earlier than it would have done previously. I think for every airline there, though, the real concern is Q3 and certainly Q4. Q3 is a bit of a mixed bag because you've still got some quite strong summer activity, but then you've got September, and September is traditionally or has been very strong with good corporate demand, but that's the unknown quantity. We haven't seen that coming back yet, and is it now going to come back? You know, we'd have all said yes, undoubtedly, this time 4, 5, 6 weeks ago. But when airfares are now escalating rapidly, when there's $200 fuel surcharges on top of the airfare, you know, there's a bit of doubt about that. And I saw some IATA numbers saying that forward bookings really are still quite concentrated just a couple of months ahead of travel. And you know, I think you can actually even still see that in some pricing going into the winter. There are some really good fares still to be had, despite all of the issues about fuel and increasing cost. If you
and in the UK, we talk a lot about the cost of living crisis and this sense that as we get into those winter months, you know, are people going to feel they have the disposable income when they're facing much larger energy and domestic energy bills and other domestic bills at home, food bills and so on? Are they going to be thinking, I'm going to take that, you know, what would be normally be a second holiday, either perhaps over the Christmas break or one of the school breaks in the winter months? I think there's a real potential for weakness in the market there, isn't there?
Oh, absolutely. And, you know, particularly in the long haul market, I think by the nature of how different markets reopened and it was very staggered, a lot of pent up demand was directed towards short haul travel. You know, so intra-Europe, intra the Americas, and within Southeast Asia. And the second trip would have been the long haul journey to somewhere. But with what we're seeing now and those rising costs, I think a lot of people are thinking, you know, I've got a trip booked, I'm going to fly in the next 6 to 8 weeks. At the end of that period, I've got to go back to work. I really want to see what the world looks like and what my personal income looks like and expenditure before I think about making a booking. So that sort of second holiday market, I think is unlikely to be as strong as we expected. And that could ripple into the first quarter of next year as well.
Yeah, interesting.
I think on this point, this is where, you know, the interconnectedness of aviation is really important. So I recall vividly last year in November being here in DC and getting the news that, you know, basically Southern Africa was cut out from the rest of the world. So as we enter into the winter months, we hope that COVID has moved from a pandemic to an endemic status. However, there is still the risk of colder months, increased infections, potentially new strains, and how that might impact travel restrictions. I believe and I hope that the world has moved on from that, but, you know, unfortunately, Africa does bear the brunt of that. And if you look at some of the booking curves, you know, we were incrementally making gains, momentum gains, you know, from the last half of the year, and then of course the cut off of Omicron took away some of those gains. So, you know, one is hoping that governments have more sense in how restrictions are imposed as and when new variants are found, and that the understanding of what it means to have this as an endemic, not a pandemic, is really important, and that consistency must be applied across the region.
Another point, Becca, of course, is you know, this list of airlines you have here, over the last 2 years, in some shape or form, many of them have been able to call upon government support to finance them through COVID-19 and all of the stop-starts that we've seen. That support's no longer there. You know, these entities have to operate and trade on their own revenues and on their own businesses and their own cost. And they still haven't built up the cost reserves or the cash reserves that we would, you know, normally have. And for that reason alone, these airlines are all going to have to carefully and very skillfully manage their way through the second half of this year. These are all either too big to fail, or there is too much state interest in them to fail. But there are other carriers who are, you know, not as privileged to be in the position these guys are, and will be looking at the sort of November, December period and having a little bit of concern about how it looks.
But we've been saying for a while, you know, why have we not seen more failures? So we've seen Comair now finally bite the dust. But are you saying, John, that we really will see some more airline failures, or will we just see mergers, takeovers? We'll see other ways for the industry to consolidate.
I don't think we're going to see mergers or takeovers. If someone's close to failure, why do you want to take them over or merge with them? You might as well pick up the pieces you want afterwards. But I think, you know, it's going to be difficult for some airlines, and yes, we probably will. I mean, you know, if as we think and we hope we're getting back to an airline industry that's close to normal, there's always maybe a handful of failures that occur every year in the December to February period. You know, they just run out of steam and run out of cash, and it's sad and it's unfortunate. And whilst we see that, you know, those carriers are burdened with debt and burdened with cost and legacies that they have to finance. As they're going out the back door, coming through the front door are a host of new airlines who, you know, have much lower cost bases, have been able to secure aircraft on lower lease rates, believe they've got a different business model, don't have the burden of the overheads, all of those sort of things. So, you know, it's the revolving door that we've seen before. I think some of those may actually not just go in the revolving door, they may go in it and come out the other side of it and exit quite quickly.
Okay, let's move on. Look at a particular market. We always, it seems, spend a little bit of time looking at China, just because it's such an important market for so many of us, especially for Southeast Asia. This is a chart we show each year, each time, just showing how the capacity profile is changing month by month or week by week from Chinese airports. It's still pretty much all domestic. But John, do you want to talk us through these big ups and downs?
Well, you can almost plot and correlate all of these against the various lockdowns and events that have taken place in China. You know, Shanghai, Beijing, Wuhan, wherever it happens to be, are all part of the process of Chinese airports and the recovery. I think the refreshing thing, Becca, is that finally we're beginning to see some of these markets recover and come back. But this is all still domestic capacity. You know, there is very little international capacity in China. It's less than, I think it's less than 1% of all stuff at the moment is international, and that is what we need to get back. And even the Chinese now recognise, you know, Premier Li's speech paid some reference to the fact that China needs to reopen and get those air services back.
No sense of a date of when that will happen, but I think there was this big speech on the 25th of May. I think concerned that they were struggling to meet their GDP targets of 5.5% growth, and as following that, there's a big Chinese aviation stimulus package. So when these airlines when the market does open, these airlines they've been operating mostly with a lot of capacity aside from this last few months. They're going to come back ready to fly to lots of places, aren't they? And
yeah, they are. It'll be interesting to see how the Chinese market, the international market, rebounds. My expectation is it will be completely focused around regional demand to begin with, into Northeast Asia, South Korea, Japan, and into Southeast Asia with a combination of leisure markets such as Thailand and Vietnam, along with the commercial centres such as Singapore. I think long haul is going to be really, really interesting because, you know, the Chinese market was probably over. There was too much capacity in the long haul international markets from secondary cities in China to tier 1 airports in Europe. I'm not sure that's going to come back. I'm not sure European airlines are going to be as keen or as quick to return to China as we might expect. We have the issue of Russian overflying. You know, adding 3 hours onto a journey at the moment is not only an issue of schedule integration and fleet planning, but it's also the operating cost. And we saw some of the stuff from Finavia a couple of presentations ago where they shared some data with us highlighting how difficult that is. But maybe it's just going to be Chinese airlines that re-enter the market. They can and still are overflying Russian airspace, and they'll probably work with their partners rather than see Lufthansa's and KLM's and other carriers operating to multiple destinations in China.
Yeah. Okay, let's move on and look at what I said we'd look at right at the beginning, which was some of these markets where we've seen capacity get back to beyond where it was in 2019. So we've got 4 of the 17 IATA regions here now positive versus 2019. So Africa's Central, Western Africa, Asia, Central Asia, Upper South America, Central America. But this Central and Western Africa is really all about Nigeria, isn't it?
Yeah. I think this is a really interesting metric, and it just shows us really the untapped potential of Nigerian aviation. It's, no entity has been able to crack it, also due to the structural factors. But this is quite telling, because you have entities such as Air Peace, who have been consistently growing in the last couple of years, and they've ramped up their efforts. So they provided capacity in recent times it wasn't there before, which also helps this momentum. And as Nigerian stakeholders are actually engaging today, there is a huge understanding that this is not just about supply and demand factors, it's about the ecosystem and the value chain. If entities cannot, in a commercially viable way, in a quick way, maintain aircraft, have access to staff, and all of the other elements needed to drive an aviation market, the numbers will always be lagged. And with that said, although this is an improvement, the potential is just not even tapped yet. So I'm very, very confident on this market. And I think that, again, to the COVID discussion, it has prompted those, not just discussions, but actions as well in aligning the ecosystem. And that just requires government support. It requires investment in infrastructure, as well as a playing field for more commercial carriers. And the barriers to not just enter, but the barriers to operate as a Nigerian airline are quite difficult. But on the other hand, the untapped potential is really, really significant.
So we've had a question in Ogago about is a new flag carrier, Nigeria Air or whatever, a valid proposition. I guess what you're saying is that actually we need to move away from that, don't we? We need to move away from the flag carriers. The government's role needs to make that ecosystem right to handle the enabling factors, and then let the airlines operate commercially. Is that what you're saying Air Peace is doing? Peace Air is doing?
Indeed, and I think Nigeria has actually led the way in that regard. The notions of an actual national carrier have died in effect. But with that said, I think the commercial parties don't necessarily have the full ecosystem support that they require. And the interesting part is that West Africa represents a perfect opportunity for liberalization. With the free movement protocols around visas with ECOWAS, there is that regulatory platform to really springboard aviation. There's an organization, I think, called GOJ Africa, which is running a campaign called Discover West Africa, leveraging off, the African Continental Free Trade Area, stimulating tourism and trade, off the fact that, the regulatory environment actually provides for that. But I think Nigeria, yes, you might hear rumors about national carriers, but that really isn't a factor. But in other parts of Africa, that is a factor. So I term this as Phoenix rising from the ashes. You have, in recent years, Uganda, Tanzania.
Let me just hold you there. We'll go on to the next slide, because here we look at the 4 different regions of Africa, and we can see we've not got the carriers here, but we've got some of the top countries in each of those regions. So yeah, carry on.
Perfect, thank you. So yeah, this really just takes us around the region. I think North Africa and the regional context is important. North Africa always more exposed to European traffic, particularly the strong leisure inbound tourism. And that has had a more impressive rebound, but of course they were very impacted because of the restrictions imposed quite early. Central West Africa, again, it's a market that is punching below its weight, very much driven by Nigeria. However, the untapped potential is probably higher than in other markets as well. I think Ghana, I always like to give some time to Africa World Airlines, who have really been a great example of what private sector capital can do. With that said, though, the Ghanaian government is very much involved in restarting the entity, and I believe has engaged with Egypt Air on that. Southern Africa, different ball game. I'd probably say the most mature aviation market. Here you have very much, the national carrier decline, as you can see in the last year. In Namibia was liquidated. You have South African Airways, who is in the process of, changing shareholder, and the government disposing 51% of their shares. You have entities such as LAM Mozambique reorganizing their corporate structures and balance sheets. You can say the same with other entities in the region, Air Botswana as well. So the national carrier environment is quite strong within Southern Africa, and that is in the process of being restructured. Same with Angola as well. And then East Africa, I think the Ethiopia data is very much through traffic because it's such a large connecting market. But you have the significant competition of large carriers between Ethiopian Airlines, Kenya Airways, Air Rwanda, within a similar catchment as well. So that really is a fight for long-haul market share linked to very strong regional connectivity. And of course, Ethiopian Airlines has the benefit of not just organic growth, but they have an acquisition-led strategy where they've invested in entities and strategic parts in the region. Most recently, Zambia Airways, who actually relaunched in the last year. And they are their equity partner. So really interesting space to be in. I think, I know John's comment earlier was that, from other parts of the world, mergers and acquisitions might not necessarily be the case, but I think with Africa, the consolidation will be through either significantly deep commercial partnerships or changes of ownership. And I think perhaps governments might not want to do this, but there is an acceptance that private capital is required in order to drive this consolidation and have the trickle-down effect as well.
Very, very interesting. I know when we spoke earlier, Agaga, you talked about the different parts of Africa very much in terms of different levels of market maturity, and we were trying to find a way to visualize that. We sort of came up with this, which I don't know how clear it is, but on the vertical axis, we've got the population of each of these countries. Each of these dots is a country, and then passenger traffic in 2019. So this is traffic in and out and within each of those countries. So it's not directional. It's not about nationality. And then we've tried to group the 4 regions, and I guess the ones that are fairly flat here, or this is mature markets, isn't it? North Africa, we're saying, is a bit more mature, where passenger traffic is strong compared to the population. And then this more vertical line, so sort of hoop here, Central West Africa, is where it's more immature, where actually the level of travel taking place relative to the population size is quite low on the whole. Is that a fair sort of description?
Well, most certainly, and I think it talks to, as I mentioned, regional differences, and also the fact that urbanization in Africa is fragmented. So, if you look at the Southern Africa side, I think that's a very interesting point where you have a medium propensity to fly, a large urban centers, and very fragmented, secondary and tertiary cities, and that breeds other business models, right? So it's interesting that, the demographics and the urbanization trends impact some of the business models. Whereas in Southern Africa, you find the proliferation of regional carriers, particularly Sema and Airlink, who've been consistently growing over the years. They are actually, driving recovery in many respects. They are launching new routes, and they're moving into almost like a mature growth stage in the current environment. So I think with Africa, the macros really have an impact on the propensity to travel and the entire aviation ecosystem. And I will always say, 2 things: regional connectivity and partnerships. If there's something that we can learn, because we cannot have national carriers in every country. We cannot necessarily have airlines in every country servicing those needs. Southern Africa is a great example. Lesotho, South Africa, Eswatini. There are multiple modes and permutations that these entities, these countries can work together to drive an aviation ecosystem that is sustainable. So it really goes, I think this point drives cross-border investment, which not just the African free continental trade area is trying to address, but also the single African air transport market. We must encourage, where there's market rationale, these cross-border investments. And I think South Africa and Namibia is a great example. These countries are joined historically, economically, and we can support each other in how we drive the aviation ecosystem. There are many examples like that across the region. And again, it is all under the umbrella of regional connectivity, because there are about 16 regional within Africa who all have a certain allowances around visas and trade and customs and excise duty. So we should leverage off that as we build our industry going forward.
We can positively sense your passion for African aviation, Agaga, there.
Becca, I think there are two factors here that are crucial and reflect where each of these regional markets are. One of which is GDP per capita. And we know that for most markets in the world, GDP per capita of over $2,000 is sort of like a prerequisite to encourage any degree of air travel and benefit from low-cost market stimulation as well. But just as importantly, it's the level of taxation that is applied to air travel in each of these markets. You know, and if you've got some of the lowest GDP per capita on one hand and some of the highest levels of taxation being applied to aviation, you know, it's a mammoth disconnect that people, governments, regulators need to work to address, because it frustrates travel. It frustrates the ability for airlines to start services, both regionally and even long haul. And of course, you know, we also, at the end of the day, we know that aviation is one of the greatest catalysts for economic development and growth anywhere. So it's you know, it's stalling the opportunity in so many ways.
So the next slide we put together was about the sort of, I guess what you're referring to, Agaga, is the ecosystem. What are the problems? And I originally wanted to have a sort of list of the old problems and then what are the new ones. And you said, no, it's one list. They're all the same. You know, these are the same ecosystem issues we've been grappling with for a long time. And I haven't put taxation in there, John, but I know we were working recently on looking at some tax levels on fares in a certain part of Africa. I mean, really, you know, 67% of the fare paid by the passenger was some sort of tax or charge. I mean, that's quite hard, isn't it, in a continent like this?
Yeah, indeed. The taxation is a really a long-standing issue, but just to segue with what's also happening currently, this week again, there's the Africa CEO Forum. It's being held in Cote d'Ivoire. It's the largest gathering of private sector decision makers, government institutions, and the president of Ghana, His Excellency Nana Akufo-Addo, he said that Africa's largest issue is that 84% of our trade is done beyond Africa. And I think that's quite a telling statistic, because aviation kind of trickles down. The element of liberalization breeds a platform for partnership. The removal of protectionism allows for private sector capital, as well as the road to financial stability. So I'm quite, I would say, tough on stakeholders on this notion that we need to accept that there will be winners and losers if we want a commercial market that really drives the ecosystem. And that's the first, you know, when you say you have a problem, the first bit in solving it is recognizing that some countries will lose on the aviation element, but they're not going to lose in terms of gross economic value added. And this boils down into everything else, because on the debt issue, like every other country, I think, you know, Africa has been criticized for having government support that happened around the world during COVID, but we are now kind of getting out of that, and we have highly leveraged businesses, you know, very little cash coming in, and a question mark on what does the future business models look like. So again, I think the message here is, you know, it's compounded issues that have really been highlighted through this COVID environment, but we need to address the elements of liberalization, of course, that talks to regulation, as well as having new pools of investors coming into the aviation ecosystem. And I think for me, that's really the exciting part. You know, the risk on the sky is just not, it's just not justifiable anymore. And it's not about the actual value of the airline businesses. It's about the risk that's imposed, and, you know, sovereigns have to cover this. And that has broader impact on how they, you know, raise financing and manage the economies. So I think that's where it's really important that we allow, you know, the new investor pools to come in, from your private equity firms to other parties, to actually drive more discipline and provide private capital and mobilize that capital within the region. So same issues, but we just don't have the same leeway to continue with these issues. And it all goes down to your last point on our business models fit for purpose. And I think that will address a lot of the questions as well.
Okay, we've got a couple more slides we wanted to look at. When we talked before, Agaga, you were asking, you know, have we seen structural changes in Africa? So we tried to pull out some data. In some ways, it's because the markets are so distorted from where they used to be. Yeah. It's quite hard to see. But if we look at domestic and international capacity, we know that the share of domestic is higher than it was before the pandemic. So, but it hasn't changed as much as I thought perhaps it would have done in Africa. So it's gone from 65% international to 61% in terms of capacity. In terms of legacy and low cost, I think we're missing a number here. I think I've got these the wrong way around, actually. I apologise. I think this should be 91% legacy, 9% previously in 2019 for legacy. So gone from no, sorry, that's the right way around. 90% to 91%, slightly more legacy capacity now than, so not a lot of change, but we haven't seen low-cost carriers move into this market particularly.
And they can't.
They can't.
No, they just cannot, because of the way the market behaves and works, and the regulatory environment. You know, there's protectionism in some cases. The issue of, you know, and Agaga has touched on it before when we've spoken to him. You know, everyone expects an in-flight service on an African service. Low-cost airlines don't work on that basis. They can't be charging $5 for an airfare when they're collecting $100 in tax. You know, it doesn't work. There is a large amount of excess baggage that sometimes doesn't get charged for. Low-cost airlines would certainly be charging for that. Very difficult to do 35-minute turnarounds in some markets, which is, you know, unfortunate, but that's an operational necessity as well. It's as hard a market to crack for its own reasons as Chinese low-cost airlines. Yeah.
Interesting though. I think. Oh, go ahead, Agaga.
Oh, sorry. I was just going to comment on that. That also, you know, with the legacy split, I think Africa has probably a higher proportion of government ownership and/or influence in the sector. And with that said, it means that, you know, recovery is not purely left to market forces. So I think that's why there is this heavier weighting and kind of lull in legacy to low cost. However, I do expect that to change, you know, given some of these market-leading transactions that we've spoken about. And, you know, what's happening in South Africa, it is going to ripple to the rest of the region. It's already, there are discussions. You are hearing more comfort around, you know, should we dispose some shareholding in our national carrier? So I think this picture will be quite different in the next 2 years. I just hope that, you know, the commercial leeway provides for that transition to happen. Because of the government ownership, this will be a bit slower to change. But also, just on another point, low-cost capacity in South Africa, the majority of capacity is actually LCC. But we will see slower changes as there's changes in shareholders as well as corporate structures. So I look forward to seeing this maybe in a year or so.
Who are the investors who are going to come in? Where are these investors going to come from, these new shareholders?
Yeah, I think it's a mix. So in line with economic development plans, not just an aviation play, you find that those who are investing in aviation, it's more of an infrastructure play, depending on what their portfolios look like. You also find that it's a play on what is a public good. So there's a public-private partnership typically between government and private sector parties or consortia, but it's not purely looking at the aviation space, it's looking at the ecosystem. Is there opportunities for synergies and really longer-term investment in effect in infrastructure? So I think you'll find a lot of infrastructure players coming into the space. And the positive from their perspective is that, you know, these assets are distressed. So you do have some leeway in how you like to kind of put your number on the table. So for me, that's quite exciting. And also it provides the discipline to manage these airlines. So I'm looking forward to what this will look like in about 2 years.
Okay. And on the bottom right here, we looked at the leading aircraft types that are being used on the continent. John, a bit of good news here, really, from our perspective. You know, more Dash 8s and fewer 777s. I think we've sort of been saying that for a while, haven't we? That actually these large aircraft are not always the right models, are they? But that goes to your point, Agaga, about business model, doesn't it? We need aircraft that work for shorter, smaller markets.
Right,
so
right sizing, absolutely vital.
Yeah. Okay, we've got one more slide. We wanted to look at some airfares. So we've taken some OAG traffic and fare data. just up till March, because it's not quite as current as our capacity data, which is why we often default to the capacity data, because we like the fact that it's just so current. We've picked 4 countries here, one of the largest in each of those 4 regions within Africa, and we can see how passenger numbers have changed and how average fares have changed. Quite interesting there, isn't it? I think for Nigeria, traffic coming back, but fares haven't risen to the same extent, have they? Which I guess, you know, if the fares are staying at a reasonable level, that's helping recovery.
Yeah,
competition.
Exactly. And Nigeria, there's additional capacity, right? So, you know, the average fares are still going to be, I would say, competitive, not necessarily going lower, but there's significantly more capacity than there was in the past. I think South Africa's case is interesting. It's more I'd say, commercially oriented in that there is pent-up demand. But average fares are not going to go down simply because the market has been in years of overcapacity. You have some of the majors consolidating, being forced to consolidate, being grounded. So those who are providing the services are now more regional carriers, particularly Link and Seme. And then you of course have Safe, who's been growing and is actually, you know, the largest individual player in the market. So I do expect fares to continue to go up, simply because the capacity is lower and people need to travel. And one will see how that plays out, because, you know, it isn't great for the consumer, but it is a factor of supply and demand. You know, there's a demand that's there, the supply is lower, you can certainly yield up. And especially given the fact that you have a lot of regional carriers who can turn down certain capacity and get the higher yield. And then I think Ethiopia is a factor of, you know, being such a large network-oriented market, having, you know, legs not just across their own network, but across their partner entities as well. And that always provides for the network effect of, you know, bargaining across markets.
Yeah, certainly, you know, the data here is the origin and destination traffic, so it's not including all of that connecting traffic flows,
Okay.
which is actually a major portion, as you say. Okay, I think we're just about at the end of the material we prepared. And I think we're just gone 4 o'clock, so we could wrap up shortly. Any closing thoughts from either of you about the prospects? You sound generally quite positive and excited, Agaga, about this particular time for Africa, that there may well be a pivoting shift away from the business models we've had, and there may be new ways of doing things.
Yeah, I think my excitement is definitely that it's a longer term. So, you know, for those investing in African aviation, appreciate that your return is not going to come in the immediate term. This is a longer term investment with an industry that has been forced to reckon with itself, as well as governments that have been forced to, you know, accept the notion of allowing private sector capital and mobilizing that to support the industry. So, you know, Africa, we continue to contribute to the world, and we will do so going forward. It's just from an aviation perspective, those returns will not be seen in the short term.
Yeah, and John, final thoughts?
My thoughts are that cautiously optimistic. I think, you know, we've survived COVID and come out the other side. We're now handling and managing the typical issues we face in the airline industry. A lot of the metrics are not looking all that great for the next couple of months. There's no doubt about that. And, you know, they could certainly spill into the last half of this year, first quarter of next. So we've got to be really careful about those sort of things. But, you know, hey, we're survivors. We're all still here. And that's optimistic, and traffic will come back. It might just take slightly longer than we expected, and it's all going to cost us a bit more to travel than we previously thought. But that's life, isn't it?
Okay, that's great. Thank you both very much indeed. We'll wrap it up there. We'll be back on Wednesday, the 13th of July for the next webinar. So do look out for emails from OEG about that, and do stay informed. Read John's regular blog, a much looked forward to blog, I think, for many in the industry. Every Monday, I think it comes out. And regular updates about where we are in terms of recovery are available on the OEG website. So thank you very much, and enjoy the rest of your day.
Thank you.
Bye.
Have a great one.